Trader Psychology, the Four Agreements. So I've spent the last 21 years of my life doing personal growth work. Now, some of you may know what that means, but basically it's going to some dark places inside of ourselves to discover what exactly may be driving some of the dysfunctional actions that we may take in our life. And a lot of that often spreads into our trading or investment as we approach the financial markets, often as we get into some trouble. So being a person that I've done a lot of this work over the years, and I'm sure a lot of you do know that I've been a certified facilitator, and I have led 22 groups of people that last about 6 months over these last 19 years since I've been certified, also certified in emotional intelligence. So doing all of this work, it's had me, looking at a lot of books. And so I read a lot of great books. And one of them, probably the smallest book that I've read as far as personal growth work goes, was The Four Agreements by Don Miguel Ruiz. I want to do a little quick summary, but I don't want to go that deep into it, because truth is, if you haven't read the book, I want you to go get it and to read it. And if you have read it, maybe it's time to pull it out again. This book talks about the Toltecs. Toltecs were people 1,000 years ago who were credited with being scientists, artists. They lived in an ancient city of the pyramids not far out of Mexico City, or the Mexico City that we know right now. So I want to share some of the highlights of the book and how it applies to trading, how the teaching applies to trading. If there's a core concept I can take out of the book, it's we spend much of our life, especially from very, very young age, maybe, from our birth to 7, 8, 9, 10 years old, essentially making thousands of agreements. These are essentially the rules that we're told of how we need to live our life. And we spend our whole life with these thousands of agreements trying to figure out how to balance them. And that can be a very, very difficult game, because what we hear is all of the voices of the people that told us all of these rules. I have to be this, I have to be that. Stop making all that noise. Okay, Daddy. Work, study, get good grades, respect your elders, comb your hair, look good so I can be proud of you. Be home by 9 p.m., as you get older and you start running into curfew, or as you start to, take on a job, be at work at 8 a.m. and get this particular deliverable done by this time. And we just make all of these agreements of how we need to live our life, and it becomes a tough balance. And I think this book does a lot about narrowing it down into 4 agreements. And if we're really able to live our life within these 4 agreements, it's going to encompass everything else, all of the other agreements, all of the other things that we learned and that we told were the rules of our life. Takes a lot of that pressure off. So I want to go over this and talk about what the messages are, what the 4 agreements are, what the messages are, how they apply in life, and how they apply in trading. So we're going to do that right now. We're going to start with agreement number 1. Let me pull that up for you right now. We'll call this the first agreement. This first agreement is: be impeccable with your word. Use language of integrity, truth, honesty, optimism, and accountability. Avoid negative judgments of others or yourself. In trading, it's about avoiding the negative self-talk that often comes up when bad trades comes or we get into a period of challenge. It's often the I'm not language. So what we want to do is we want to change that I'm not language to what I am, the positive things that I am, and get rid of all that self-talk. Stop all of that language, unhealthy language that goes through our brain, that somehow along the way we learned in our life that would work to motivate us in a negative way. Often these negative thoughts, they do actually drive us early in our life or through our life to be better, to learn things. But the truth is, a matter about that is that we create our own reality. Our beliefs lead to our actions and successes. Especially in trading, if you say you're going to fail, if you believe you're less than, if you believe you can't be successful at it, your actions will support the failure. It will mean you don't work hard, you don't study hard, you don't look at the strategies you could use, you don't do so many things that can give you a better understanding and knowledge about the markets, and to be able to find high probability actions that you can take. So you believe you're going to fail, your actions support failure. If you believe you're going to succeed, your actions support that success, because you'll have the confidence. You'll say, boy, I know if I take this action, I'm going to learn this. It's going to give me the ability to make this particular trade or investment, which has a higher probability, I believe, based on the work I'm doing. So your actions, your positive actions, are going to support that success. So we're going to go, that's the first agreement. Now, that's be impeccable with your word. The second agreement is don't take anything personally. What people say about you is a projection of their own history and has no meaning to your own sense of value, to who you are. People could make a judgment about you, but it's based on something in their own life. They're responsible for their own actions as you are for yours. So if you think that you did something to get somebody in trouble, that they took an action, they're responsible for their own actions, and you're not any less than, so you don't take that personally. If you get caught in something in your life, you don't do it as well as you could, then you're responsible for your own action, and it's about learning as you move forward. In trading, when challenges come, no, it's not reflective of who you are. Reject thoughts of how other people may judge your decisions. Own your own mistakes and embrace them as the way that you can learn. A lot of us have agreements with our spouses, significant others, partners, that we're going to act certain ways in our trading, and we are going to limit risks in a certain way, trade certain sizes, operate within the structure that we create for ourselves in a healthy way. We're all going to get off that at some times. And people, they may judge us for it, but that's their crap. It's really about you holding on to knowing that you get it wrong, you're going to learn from it and move on and hold on to the greatness about you. When you get that less than feeling, think about the greatness of who you are. All of the successes that you've had, the relationships, the pleasures that you bring to others and to yourself. And give trading a proper role in your life. Don't ask trading to do things that it can't do. Pay bills, pay for college, show that you're a successful person because you did it in trading. You're a successful person because of who you are, not because of what trading does for you. So the second agreement is don't take anything personally. The third agreement is don't make assumptions. Man, do we all do this in our relationships? I know I do, and I know that it took a long time of this personal growth work to understand and get better communication skills. Now, my wife has done a lot of this work also, and we have great communication skills and a great relationship. It's because we won't make assumptions. If we're not exactly sure what the other person wants or needs, or what they mean when they say something, we will ask. What did you mean? What do you want? How can I help you? How can I serve you? And man, does that ever get us through a lot of difficult stuff. With family, friends, coworkers, we often guess what others mean, what they want, and that leads to big problems. We're often afraid to ask, and improving communication with our relationships help us so much. So how does that help us in trading? Well, in trading, we make assumptions all of the time. So the third agreement is don't make assumptions, but now I know in trading we make assumptions. However, they have to be based on our own work, our own style, method, research, things that we do. Are you taking ownership of your own trades, or are you making assumptions that others are correct. I do a ton of research. I bring a ton of stuff. I don't know anybody that brings more stuff in a short period of time to viewers than I do. But if I'm really good, I'm right 65% of the time. That's really good. So you can't take what I say as God sent. Simply, it is you who will take the work that I bring and then apply your own efforts to it, and then make it your own. The reason that we do that is because you have to be in charge. You have to be in charge of the trade, just like you have to be in charge of your life. And it's how you're going to make the trade, what the size of the trade is going to be, and then how you're going to control the trade after that. Because you got to be in charge when to get out. So this don't make assumptions goes towards the way that you trade. And taking ownership of the trade, and many, many other aspects about trading, and about how we do research, and about how we learn, and about what we hear in the market. A lot of it is just noise, and we take it on because we don't trust ourselves. So it's about being in a place of confidence, and then making an assumption about that we can be in control, that we will be the ones that are in control, and not making assumptions about anything else. When I say something and you don't agree with it, I actually make myself available, because you can send me an email and I'll be glad to answer, and you don't have to make an assumption about anything I say, because I'm going to answer you. And that's about you feeling good enough about yourself to say, I'm proud of myself that I can ask the question. So hold on to that. Don't make assumptions and ask questions. The fourth one, and this one, it's going to seem so simple, but the truth is that it really what anchors all of the first three. And that is, the fourth agreement is always do your best. So, that seems like something you'd say to a kid, right? Well, each day is different for us. We have different energy levels. We have different focus. We don't feel good some days. Some day our drive is low. Some day our drive is really good. There's something that happened the night before that is still lingering, and we're thinking about that. And we're at a different level every day of engagement in our life. The key is that no matter where we are, no matter what our energy level is, that we're going to give it the best that we can give it on this particular day. That goes a long way in trading and investing, because when we're in the markets, there are opportunities to be wrong every single day, each minute. Take it from somebody who's been a S&P scalper since about the day that they came out. Yeah, I used to trade the big contract, hundreds and hundreds of them every single day. So that was before E-minis took over. I've been a scalper with my average holding period during the day as short as about 10 minutes back a lot of years ago. So there's opportunity to be wrong all of the time. And each day is going to be different for us, how we're able to engage in the markets when they're presenting these challenges for us. Doing our best may mean that we took losses correctly and had a good losing day. Losses are good. And we have to really start to think about that when we're acting the best that we can for the day, we're going to have losing days. I tell people that are short-term traders especially, that they're doing really good. If you make money 53% of your trades, and you, let's say, break even on 10% of your trades, you're going to lose 37% of your trades then, right? 53 and 10 is 63. 37% losing trades. That's 2-to-1 winning trades. You're still going to have 30% of your trades losing. That's an opportunity to lose a lot of money in those trades. But if you can control those losses and have that 53% win ratio, man, you are going to make a ton. And that means getting a better win-loss ratio and getting bigger winning trades than losing trades. A lot of people on other networks, and you probably know who I'm talking about, will tell you differently, and they say ignore the losers and just take profits on your winners. That's a loser's way of trading, to tell you the truth. Not a good way to trade, and it doesn't bring good, steady profits. So what we want to do is we want to be our best, do our best in order to lose correctly and take that loss and say, man, I was as good as I could be today. And maybe you have 3-4 losing days in a row. It doesn't mean anything. Remember, we're not going to take anything personally. It's just the market, and it's just the way things go. If you're going to lose money 37% or 40% of your days trading, if you're a day trader, that may be difficult. You're going to have negative streaks. It's about doing our best, handling it our best, because when the good times come, we're going to do really, really well after that. So your best may be just keeping to your plan and not acting overconfidently when you're in a good streak, in one of those good streaks, because there's so much chance for over-exuberance, trading bigger, piling up the money. And so being your best may be actually controlling that and not getting crazy when you're on a really good streak. Know when you're cold and off, and pull back, and be joyful that you're confident in yourself and you did exactly that. So that is the 4 agreements. And the 4 agreements is really a great book. It's not a very big book. This is what the 4 agreements book looks like. And I really, really encourage you to go out and get one. This one I borrowed from my wife. It happens to be inscribed by Don Miguel Ruiz to her, and she's a coach too. So she, of course, first showed me this book, and I think it's just fantastic. You can actually get these little guys right here if you want to buy one of these. They're like $6 to buy one of these little ones, and just have it in your purse or pocket if you want to carry one around.